Ladies and gentlemen, good morning and welcome to Patanjali Foods Q4 FY23 earnings conference call hosted by Antique Stock Broking. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Dheeraj Mistry from Antique Stock Broking. Thank you, and over to you, sir.
Hi, good morning all. On behalf of Antique Stock Broking, I would like to thank management of Patanjali Foods Limited. I would like to introduce Mr. Sanjeev Asthana, who is the CEO of the company, Kumar Rajesh, CFO, and Chintan Kotak, IR. I would hand over call to the management for their opening remark. Over to you, sir. Thank you.
Thank you, Dheeraj. Good morning, everyone. Welcome to the Patanjali Food Limited's call to discuss the results for Q4 and annual FY23. I'm joined today by the company CFO, Mr. Kumar Rajesh. Mr. Apurva Kumar, who is the head of nutraceutical business, is also here with me. We also have our investor relations consultant, strategic growth advisor, SGA, on the call. I'm pleased to update that we have achieved record numbers across all the financial metrics in the financial year. The revenue from operations stood at rupees 31,525 crores. The EBITDA stands at rupees 1,577 crores. As an organization, we are focused on few strategic areas for our growth, and allow me to run you through some of these. On the oil side, we continue to be the leaders with very strong brands like Ruchigold, Mahakosh, and Sunrich.
This call is now being recorded.
Our focus remains on expanding this segment and improving margins, particularly through a model that aligns with the Atmanirbharta campaign of National Mission on Edible Oil Palm. We are taking steps to grow our foods business. The Patanjali brand commands a strong recall and loyalty, and we intend to capitalize this by capturing a more sizable portion, thus making Patanjali one of the leading names in the FMCG and FMHG markets. Inherently, margins of our food business are better than the oil business. Going forward, this side of the business is expected to grow at a much faster rate, albeit at comparatively smaller base. And we have done exceedingly good performance in the 3 quarters that we acquired the food business and the other businesses, which we'll talk later in the call. Overall, in alignment with our vision to establish ourselves as a prominent player in the FMCG and FMHG sector, we took strategic steps and bought a series of products across categories in our fold. As industry pioneers, we maintain our leadership position in texturized soya products, which is well-known brand of Nutrela. Our ghee, biscuits, and staples have gained immense popularity among our customers. This year, on an annual, our ghee sales have crossed 1,200 crores plus. We are seeing a double-digit growth in the positive category, particularly in biscuits and ghee categories. In biscuits, we've grown to almost 1,300 crores on the annualized basis. It's growing at 20% year on year. And our Chyawanprash and honey continue to have a steady demand. Our initiatives across segments are building a strong momentum for us, and we are off to a good start in financial year 24. Our company's presence across multiple categories and price points is driving our market share growth, fueled by a relentless focus on product innovation and premiumization. This is enabling us to capture the evolving taste and preference of our customers. I would like to update you on the few strategic areas which are important. Through the year, we have signed multiple MOUs with all the state governments on the oil palm plantation business that we have undertaken on a very ambitious way. We signed MOUs with all the leading state governments in Northeast, which is Assam, Arunachal Pradesh, Mizoram. We signed 2 new MOUs during the quarter with Tripura and Nagaland. We have signed MOU recently with the government of Telangana, where they're extending all the support and for our investments in Telangana. And Andhra Pradesh, we already have large plantation business there. Our oil extraction rate, the efficiency in the FFB processing that we have continues to be one of the best in the industry, in line pretty much with the global standards. In terms of age profile, most of our plantations, almost 2/3 of our plantations are mature and generate healthy yield. And, rest of the plantations are in the early stage of development. So almost it's a fairly healthy state of mix that we have on the oil palm plantation business. On the distribution front, our new age customers have given rise to the e-commerce stores and omni-channel retailers. Our presence across omni-channel retailers and e-commerce stores is enhancing our visibility amongst our target customers. This has added new avenue of sales to the business. Our e-commerce sales of food took an update. There was a notable uptick of nearly 50%. The oil sales through the platform have grown by 160%, though the base was small, but we continue to grow. Our B2C website and app are growth enablers here. Our app has almost touched 1 million downloads now and registered users. With technology, we are driving a lot of technology from the BPOS and B4s, and maximization of sports target is there, so that our reach and expansion is there. In terms of geographic spread, we are well placed across the country as we continue that. In addition to this, we have almost exported more than 500 crores to 31 countries, our products. The company, as I mentioned last time, we have worked very seriously on the premiumization, and the launch will be happening in 3 distinct business segments. One is the nutraceuticals, which is completely revamped and completely changed now. And that launch, the first launch of the premium end of the sports nutrition, you will see in next 2 weeks' time, when we're going to be launching it with new packing, new flavors, and new price points. The second one is in the millet-based product, which I had mentioned last time. That is also we are making do along with the sports nutrition launch itself, which also shall be happening in the month of June, where we're coming out with ragi-based products and other products. Similarly, on the biscuit side, which is business growing at has grown to 1,300 crores. We have come out with 3 new variants on the healthy side, which is 7-grain, which is ragi biscuit, as well as in the other areas in terms of the digestible biscuit. And similarly, 3 more biscuits are under the works, which will get launched, and all these products will get launched by between 2nd week and 3rd week of June. We are taking the dates for the launch, and they will be done. Similarly, the success of Patanjali, as it is getting attributed to the employees, we've continued to sort of build up on second line. One of the key steps that we took, we showcased all our leaders through social media campaigns and formalizing. And as a starting point, we invited Mr. Apurva to this call today, that in case there are questions around nutraceuticals, he would be able to answer. We have continued to work in terms of hiring, people, talented people from good companies. We continue to track their performance and inspire them, and we're working in terms of taking the company towards greater heights. Patanjali is committed to a stronger and more sustainable future. Our oil palm business model ensures that not only are we benefiting the farmers, but we are also protecting the environment by employing techniques like crop rotation and avoiding deforestation. Further, we are producing almost 85 megawatts of energy, of which 16 megawatts is for captive use itself. And we uphold our promise to protect the environment by lowering the emission standards. In terms of our minimum public shareholding requirement of reaching 25%, investors had raised one point of looking at the Q4 results and the annual results. So that our results are getting declared today, and we are expecting to close this between June and July. Our requirement of minimum public shareholding will be met, and we'll be closed and done with that. At a macro level, with the increase in the inflationary pressures to start in 24, they're easing. The disposable incomes are picking up. There's an uptick in the rural demand, and we see there's a big surge in our sales typically, which are more tuned towards the rural areas. And there's a very steady urban demand, which is basically building up an outlook for our food segment, particularly becoming positive. The new launches and innovations, especially in the ready-to-cook and ready-to-eat space, we expect a surge in demand. The global prices have softened on the raw material side. This is helpful for our food business and not so helpful for our edible oil business. And yet we power along in terms of the distribution reach, the product innovations and premiumization. We have commenced the fiscal year on a favorable trajectory and expect to sustain the momentum. I will run you through the financial highlights of the quarter 4, and then we will open up this conversation for Q&A. The revenue from operations in quarter 4 stood at 7873 crores, and our year-on-year growth, if you look at it, was almost 18%. The EBITDA for the quarter is 416 crores with a margin of 5.3%. The PAT stands at 264 crores with a margin of 3.3%. Prior to delving into the numerical breakdown, I would like to mention that we restructured our segment reporting. Earlier, it was in different segments. Now, for example, the oil business comprises of the oil palm business, along with the edible oils, vanaspati, and all its derivatives and byproducts, and the crush business. They are reported in the edible oil segment. Our food segment encompasses 4 key businesses, which is the food business that we acquired from Patanjali, the biscuits business that we have, biscuits and confectionery. The third business is the nutraceuticals business, and the fourth business that we have is the Nutrela, the texturized soya protein. These 4 segments are falling under the food segment. And then, of course, in the other segment, we have our windmill operations, which I mentioned about earlier, about 85 megawatt that we have installed capacity. And as an overall sort of segmental communication, in Q4, the edible oil segment contributed to 6,136 crores of sales and resulted in a margin of 2.3% in this area. Likewise, the food segment, in terms of sale, contributed 1,805 crores in quarter 4. This is a substantial uptick as we continue to gain momentum and continue to drive it forward. Let us understand the performance of each segment. In the edible oil, the palm oil industry has suffered severe price volatility along with soya and palm. This volatility can be attributed to the elevated crude oil palm prices and supply chain disruptions that were caused, and subsequently they started to come down. The edible oil continues to contribute almost 81% of our revenues, which is substantially down from 90% plus that we had last year. And this segment, I'm expecting that the foods will continue the mix of revenues on account of the foods and the other highly profitable businesses will continue to expand. We have almost done nearly 20% of our business is now comprising of the food business. Nearly 72% of the profits are coming out of the food business itself. So we continue to work on changing the mix of the businesses that we have and to prevent the kind of volatility that was witnessed in the quarter 2. Despite this rise in the raw material prices, we have not earlier did not increase the selling prices, which has maintained our market share. We have grown substantially. Our EBIT per ton, while it took a hit, but we have had a volume growth in edible oils to almost 5%. So, for example, this year our volumes in edible oil is 1.91 million tons, which has a substantial growth compared to the industry, almost 21%, compared to the growth the country witnessed for about between 3 and 4% typically that is addressed. So there are positive signs in terms of the edible oil business and the way it is progressing. In the food segment side, it has achieved the highest ever standards of 6,128 crores for the full year. This is a testament to our strong portfolio. We have maintained a healthy segment results of almost 18.29% margin, EBITDA margin in the business. The Q&Q growth of 19% is higher than the industry standard. Food as a percentage of the overall company, as I spoke earlier, is almost 19% on a full year basis now. And we are supplying to all the domestic markets with a good geographical expansion. We continue to expand our reach to the distribution structure. During the year, while inflation was continuing to be a factor, we have continued to expand our portfolio on the food side, and this has been very supportive in the way our businesses have done. If I were to look at the revenues from during the quarter, the food and FMCG portfolio total out of 1805 crores. Our food products with the Nutrela was about 110 crores. The food division, the acquired one during the quarter, was 1,333 crores. The biscuits did about 360 crores. Nutraceutical, we continue to witness the overhang of the large inventory that we have pushed in the second quarter, and the sales were there, but they were marginal. On account of windmill is a marginal turnover of 9 crores that we had. So the idea being that overall in terms of the company, the way it is progressing on the food side, the way the edible oil volumes have grown, and we are trying to sort of work in terms of the premium variants of the edible oil segment. We are very confident of the year as it goes forward, and we believe that company will continue to drive its growth and will maintain the growth momentum as we go forward. For the financial year 23, the revenue from operations stands at 31,525 crores, which I mentioned earlier. The EBITDA is 1,577 crores and with a margin of 5%, and the PAT is 86 crores with a margin of 2.8%. Our full year outcome is, of course, an outcome of the acquisitions that have been made, and very good ones, which is changing both the profile and the configuration of the company's turnover mix. It is changing the quality of profits that we have seen, and it is also bringing in the higher sort of margin construct by bringing in superior return businesses into our fold. So with this, my opening remarks are over, and now the floor is open for Q&A, which we are here to answer any questions that you may have. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question comes from the line of Aditya Jawar with VT Investments. Please go ahead.
Hello, Archana. Very good morning. I wanted to understand the edible oil business in detail. Actually, is it good to be this because always volatility will be there and we'll incur inventory losses here? Could you explain the past history, how prices have been trending, how strategically it makes sense to be in this business now in India? And how are we dealing, because we want to generate superior ROC, then we have to sell more. But when I see the capacity utilization, it's always trending between 40% to 50%. And what is the internal metric you look in edible oil business that it is doing great? And how do you see it pan out for a couple of years? Yeah.
So thank you for this question. You're absolutely right that edible oil business, on account of the volatility, typically is less predictable. However, what we are trying to do is that we have looked at the business from 3 filters. Number 1 is that there's a large asset base we have, there's a turnover that we have, and giving that up does not make any sense. So we've continued focusing on selling more of branded business. So for example, our business branded side, our business would be almost 80% that we sell. Now these brands are commoditized brands. So the premium that you can extract on account of the palm oil business or the soya business or sunflower business typically would not be the same in the category of what we have in the foods business. So that continues to be one challenge that we face. The business margin construct, if I were to explain, basically is stacked up at multiple levels. So one is the supply chain efficiencies and the pricing efficiency that we have in building up supply chains from the global market as well as in the domestic market. The second tier is the efficiency in processing. Our infrastructure is world class, and we do it at price points and cost structure in the way that we would be right at top in where the processing costs are concerned. And likewise, the distribution through almost more than 100 plus depots, the sales team that we have on the ground, the business that we have built with the distributors and the retailers. So there's a greater brand equity and there's some bit of predictability there as well. The challenge this in particular year has happened on 2 folds. The prices, if I were to give you a small reference, on 30th of June, the price in palm was 1,20,000 rupees a ton, soya was 1,30,000 rupees a ton, and sun was 1,56,000 rupees a ton. This at the end of March became from 1,20,000, it became 92,500 rupees a ton, which was a substantial drop. From soya oil became from 1,30,000 to it dropped by almost 22,000 rupees a ton to 1,02,000. Likewise, sun oil dropped by almost 25,000 rupees a ton. And if I were to look at the overall year in terms of the financial year 23, what the range has been, The drop in palm oil prices is 75,000 rupees a ton. Soya, it has been 65,000 rupees a ton, and sunny oil, it is 92,000 rupees a ton. The problem is twofold in this. One is that the global factors, especially in Q2 that we saw, that the prices just fell off the rack on account of the war in Ukraine, the challenge what we had in terms of the regulatory ad hoc actions from Indonesia on the palm oil exports, and then suddenly removing them, and likewise the overhang that we had in India. That was a big cause which basically saw the prices declining. Thereafter, what we have seen is that prices have continued on the declining trend even in this quarter also. So to your point of saying that, the business is fraught with risk, and I don't have to take the names. You can look up the balance sheets of across the sector in India and globally, the impact the edible oil prices have had on the all the major global players, as well as these in India, which has had an impact. So to the point that should we be doing it at all, I would say that yes, we should do it because it's a strong strength that we have. We leverage at multiple levels. The access to distribution is not easy to build. It's built over a period of time. The supply chain competency that we have, as I mentioned earlier, that we've grown our volumes by 21%. So it's not just the growth has not come on account of some price increase or otherwise. And distributing the size and scale of business requires a lot of effort and a lot of cost and experience over long years. So it's more than 3 decades of experience which has got us here. So I would say we should be in the business in terms of return on the capital that we employ. It can be very decent return if there are 7 turns in a year if we can achieve, and we are making consistent margin of 2.5% to 3% a year, 3% in the each turn that we do. So we are looking at a return base of almost nearly 20%, and that is a fairly decent on the working capital that we deploy. The challenge is when the market goes through the volatile times, and that we have continued to work on. For example, after the drop, we continue to hedge our risks on the global exchanges like BFD and Chicago. We have introduced measures. We have looked at artificial intelligence. We have hired external firms. Internally, we have got technical analysts and chartists. So there's a lot of steps that we have taken. I would not be so disappointed with the business. Yes, business has to be managed for profit, not continuous volumes and scale, and that we're working on. I believe with the price points where we are right now, I think the challenges should be more behind us because the prices have dropped so drastically that we're expecting a sense of stability in the business. And as we go forward, we will continue to improve on this business, and we'll have an uptick in both in terms of the margin profile, as well as the overall profitability that we have in the business. But yes, it's a work in progress.
Okay, sir. Just to follow up, just to summarize this one, if suppose our palm oil prices comes down, is that a good thing, or the volatility should be less? Is that a good thing?
So to answer your question, if the palm oil prices come down, in general, it is not a good thing because for any player who brings in the oil and who is structurally long, in general, will not be a good thing if our player is completely unhedged. But when we buy palm oil from the international market, we always hedge our exposure at the BMD exchange. Now, and Indian prices are nothing but a pass-through of the global prices as they emerge. So the challenge that we face always is that if you got inventory which is priced at 100 and the prices drop to 90, that the domestic consumers will tend to buy because the competition continues to sell at 90 plus the processing cost plus the margin. That margin is there, 1.5%, 2%. So if you are not hedged, then you are losing that money. But in general, we tend to do our operations more on the hedged basis to de-risk ourselves and manage it accordingly. But to a specific answer to your question, if I were to say, is it good for a player in general like us, I would say not that good.
Okay. So in the past, if you explain that in the past cycles, maybe we have a lot of cycles, right, in the past, in 2015 to 2017, how the prices were trending and current, how is the business you look forward? Because I think we have import ban on the Malaysia, Indonesia, because government strategically wanted less import and have more domestic consumption. So could you throw light on the past and the current scenario?
So prices have tended to continuously. There's a big inflation on the edible oil prices over the years, and they peaked in COVID times, 20 and 21, which reflected largely in very solid performance, for a lot of companies which are at the commodity end of the play. But this issue of Malaysia ban, Indonesia ban, there's nothing of this kind at all. It happened for a brief window for about a month when there were some political challenges. Right now, the edible oil duty structures are very benign and very supportive. The government is very keen on keeping the prices in check and completely in control. The trade flows there's zero restrictions where India is concerned in terms of importing any of the oils that are there. So, in general, I would say from the regulatory side, there are no challenges. From the side of the price going forward to your question specifically, I would say the price points where they currently are, the prices market should not only have an uptick. I'm seeing that there should be a good demand coming in as well, with the prices stabilizing at a reasonable level. So I see a very good prospect for the edible oil business. But to the point that with 100% or 90% of the business as it was last year under the edible oil and commodity, we have changed it. As I mentioned, we've got it to almost 80% edible oil now. In going forward, our mix is going to be that while revenues will continue to get derived from the edible oil, may trend lower, but our share of the food business will continue to expand. And in the fullness of time, 80% of our profits of the company will accrue from the food business itself. So we are already at 72%. We want it exactly in that way, and that's the kind of mix we'll be going for. And our business in edible oils will not be on volumes. It will be on the profit and the distribution and the brand equity that we are able to bring to our different systems. The one just wanted to add, on the oil palm plantation side, that's almost a consistent annuity business. We continue to look very healthy margins. It's a strong portfolio that we have. In next 4 years, we're expecting that business itself to be hugely profitable as our plantation that we are continuing to plant are going to bring in. So net, I would say in the edible oil business, the way we are structured right now, I'm very bullish on the company's future on the edible oil side.
Okay. Thank you so much, sir, for the detailed response. I'll get back in the queue for response.
Thank you very much.
Yeah.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and 1. Our next question comes from Vikas Mistry with Moonshot Ventures. Please go ahead.
Hello. Thank you for the opportunity, sir. Sir, I have a couple of questions specifically on food side that in press release you said that we are going into dry fruit segment. And what is your opinion and what will be your strategy? Because every player is also eyeing for the pie of the 35,000, 40,000 crore market, which is growing quite fast. So what is your opinion on that?
So the dry fruits business is one of the strong stays that we have. We do almost, a business upwards of 100 plus crores in the dry fruits category, and Patanjali is a recognized sort of brand in that space. The opportunity that we are seeing is right now that market is nearly 50,000 crores. It is growing at 10 to 15%. Globally, India has moved almost center stage in the dry fruit segment from the demand perspective, as economies struggle in Europe and China tends to stagnate. We have a great possibility of building up a very solid brand around dry fruits. Now, to give the specifics of how the margins tend to stack up, the retail margins are very high in the dry fruits. The problem is in the supply chain that there are leading suppliers globally where they are keenly looking towards India, but their access is into very unorganized segments, smaller players, very distributed ways of distribution that they have, both in terms of the integrity of contracting and otherwise it is suspect. We have recently signed up 2 partnership agreements for supply chain. These are MOUs that we have signed. One is with a company called Wonderful, which is the largest pistachio player in the world, with nearly 55% of the market share in the US. The second company is Mariani on the almond side, one of the leading players in the US. We are working in terms of building up our supply chain further on the walnut side, both from Chile and US and other origins. And likewise, we have set up, we're importing the raw cashews from Africa to be processed in India and done. So that is at one level where we believe that the margin construct in our supply chain competency and the relationship that we have, we should be able to pull in better cost efficiency by nearly between 3 to 4%. The second target that we have is that our brand premium that we do, both through our retail store, where the retail margins are much higher, but the distribution margins, both through the relaunched packing and the branding that we're going to do, we should earn between 3 to 4% of margin in that business. So we are very optimistic on the dry fruit category, and we are working quite aggressively, in terms of having a structured supply chain partners with us. Our distribution structure is very strong on the food side. We have our own stores through mega stores, Ayurveda Kendras and Chikitsa Kendras. So we are not only committed to dry fruit as a segment by providing healthier and more premium options to our consumers, but we are also aggressively pushing for it now. Just by way of information, just 2 days back, we set up our first pilot plant for almond processing at Patanjali unit. Very small unit, but basically test out our thesis on the processing and how it is going to go. And this will pave the way for more distributed infrastructure that will create in terms of the processing capacity that we are going to put in the country. So we are very bullish on the growth, and we're targeting larger numbers during the year. And you will see, as I mentioned earlier, on the drive of premiumization, when we do this launch sometime in second or third week of June of the other premium products, this dry fruit category products, both we are exploring under the Nutrela brand as well as in the Patanjali, would be launched at the same time.
Okay. So this is a small clarification that are we also entering into the ready-to-eat dry fruit snacking type of business? Plain vanilla kind of dry fruit selling through brands only?
Not yet. We are not entering that segment. I think the important part for us is to get our supply chains from the global supply sources sorted out, get our feet wet in terms of the branding and distribution at a much larger scale, looking at organizing ourselves. Then we will subsequently get into the snacking side. If the results are positive, then we will get into that space.
Okay. Sir, my last question is that we keep struggling to understand that Patanjali still has a value-conscious kind of brand and penetrate into premium. As per your brand velocity, you are eyeing Nutrela as a brand for premium segment and Patanjali for a being value segment. So I am trying to understand, sir, what is the strategy and how we will make sure that people don't perceive us as only a value brand or being Bharat brand. So we keep struggle with this question, so I could not get any clear answer about it.
No, thank you for asking that question, because one of the major efforts that we have been making is that in terms of the perception and market positioning, how market perceiving us. But I wanted to make a small correction. There are series of products where our Patanjali brand, for example, the cow ghee, we sell at the best premium in the marketplace. In the non-food category, toothpaste like Dant Kanti. In our food business, if you look at Nutrela, which is absolutely at the right of the premium level. So we have got a range of businesses and range of brands and certain segments where we are positioned at a premium level. What the larger issue is that especially, and I'll walk you through one by one in all these areas. I'll first go to the nutraceuticals. Nutraceuticals, as I mentioned, that we're looking at completely relaunching with the rebranding, redesign, more flavors, more contemporary launch that we're doing. And if the time permits, I'll ask Mr. Apurva to sort of comment on that as well as to how that business is expanding. So you will see the first completely redesigned nutraceutical sports nutrition getting launched very soon. The second part is, so that part is correct in terms of the value part of it and how it plays out. That we are working on it towards making sure that this should be done at a very premium level. We are increasing our price points because our products are world class, our products are world beaters, they are absolutely at premium level. So there is no reason why the product should get discounted. So this is one part. The second is in the biscuit segment, you're right, because almost 800 crores plus that we've been selling is in the Doodh biscuit, which is at a competitive price level, and it competes with glucose and other milk biscuits. But there also we are working in terms of launching our premium variants. We have improved our margins in the biscuit side, but you will see 3 immediately getting launched and additional 3 getting launched at the premium level, which is pretty consistent with what our competition has been doing as well. And plus, of course, on the Nutrela side, we're looking at the millet-based products, niche products, more healthier segments. So the effort is that whenever we're looking at our new launches, the idea being that we should occupy centrality of the consumer's wallet at a premium level, where we should be able to offer the proposition to the urban consumers as well as to the rural consumers who are willing to pay for it and are exploring options around quality, around packing, around the value attributes that we bring to the table. And we are quite positive that we will be able to, the new product range that we have, we will be able to completely reposition ourselves on that side. I just want to add one more thing, that on the Sunrich brand of sunflower oil, we are working quite aggressively, that we want to not only we want to increase our premium level offering that we have, and we're working quite actively in terms of making sure that the Sunrich gets relaunched at a premium end of the edible oil segment, where we are able to accomplish per ton per unit margin, which is higher than currently that we're witnessing. So overall, we are pretty convinced that it is going to grow and build up and develop into something substantially, which is going to improve our entire work that we are doing towards the food business in terms of expanding that range and building it up.
Thank you. That's all from my side, and all the best for premiumization strategy going forward.
Thank you.
Thank you. Ladies and gentlemen, a reminder, if you wish to ask a question, please press star and 1. Our next question comes from Kuldeep Gangwar with Ask Investment Manager. Please go ahead.
Sir, couple of questions. One, this other income of 90 crore, whether it's having any one-off, like what it comprised of?
So I will ask Kumar Rajeshji to answer that question, our CFO.
Yeah. Good morning. This comprises of about 61 crores of interest charged from the customers on delay payments, and some of near about 15 crore like compensation, and other interest on FD, etc.
Okay. And sir, in edible oil segment, the margin was 1.9%. It is more to do with any high cost inventory being consumed or a mark to market in this particular quarter?
You can say some portion of inventory and some portion of mark to market.
Okay. If we think about either edible oil segment or a food segment, what should be the expectation on growth side and margin side in coming year in FY24?
So Kuldeep, are two very clear points that I mentioned, that as the markets have continued to slide, our expectation, which we have consistently maintained, that the edible oil business should generate between 2 and 4% of EBITDA margin on a consistent basis. And the edible oil business, the margin should be between 2 and 4%. On the food business, we are pretty, between 18 and 20% margin as we want to maintain. We have the range. This year we did about 18%, and we're expecting to maintain the same rate. With the effort on the premiumization side, there would be an uptick in the margin, but it would not be at a scale and size that ought to be impacting the overall bottom line in very substantive way. But our target definitely is that we want to move towards closer to 20% than towards 18%. And now this year we'll get the full benefit of the all 4 quarters of the food business. Our biscuits portfolio, as I mentioned, we want to keep tweaking to go towards more premium end. So compared to about 9.5-10% that we do, we want to move, want to do better than that. Nutraceutical space, as we've done the business, our margin profile is very improved. Sustaining that will not only be important for us, but with the newer launches, higher price points, and better ways of running the business, we are expecting that we should do better. So net, I'm optimistic that 18 to 20% prediction that we have on the food side, we should be able to maintain, and we should be able to retain that in that space for ourselves.
And sir, in terms of revenue growth for either edible oil and the FMCG part of the business, like what should be the growth expectation, top line level?
So the growth on the food business, as we mentioned, that we will maintain a 15% growth rate in the food in terms of the revenue. We will maintain, so this year our overall 6,000 crores plus of food that we have. This year we're expecting that we'll have the full benefit of all the 4 quarters in the food side. So we should not only have an uptick on that front, but we should also maintain a healthy growth on the of almost about 15% growth that we expect. And on the edible side, I don't want to speculate on the revenue side, but typically if the price points are stable, I'm expecting that the edible oil there should be a marginal decline if the price trend remains soft. So we should be pretty much at the same level as on the revenue side. But as I mentioned, the focus on the edible oil revenues is very clearly in that segment, that focus is on margin generation and not so much in terms of the turnover.
Sure. And the last bit on nutraceutical on the base of 500 crore in FY23, what should be the expectation either coming year or from 3 to 5 year perspective?
So 3 to 5 years, we are expecting, as we had mentioned before also, we would like this business to be closer to 2,000 crores, which would reflect, between 2 and 3% of, the category sort of expansion that's happening in nutraceuticals. And that is the growth we are targeting. The target in the growth is, of course, as I mentioned, that it's being completely relaunched in a new avatar. So when I'm saying new avatar, the branding, etc., everything, the name, title, everything remains same. But you will very soon see that the new packaging that we have, the variants that we have, and it's a business which is appealing a lot to the youth, especially in the sports nutrition. So that we are pulling out all stops in the chewables, in the gummies, in terms of the launch on the variants, the flavors are different in the food, in the nutraceutical, the sports segment. We will be coming out with 6 products and 18 SKUs in that, both in terms of whey protein powders, the proteins and others, and likewise in the VMS segment. Thereafter, we are going to be launching it. So you will see a very differently positioned in a totally different avatar, our nutraceutical business in this year.
Sure. Thank you so much. These were the only questions from my side.
Thank you.
Thank you. Our next question comes from the line of Shirish Pardeshi with Centrum Broking. Please go ahead.
Hi. Good morning, team. Thanks for the opportunity. Sir, my first question is that in the 1,800 crore quarter sales for FMCG, you have provided 60% is coming from the biscuits, doodh biscuit. Can you provide the breakup of 6,218 crore for the full year? Similar breakup?
Yes, I can give you that. Yeah, so the breakup that we have on the for the full year out of 6,218 crores, our Nutrela business did 566 crores. Our foods business has done 3,791 crores. Our biscuits business has done 1,352 crores, and our nutraceutical business has done 509 crores.
Yeah, wonderful. In that 1,352 crore, what would be the doodh biscuit?
Doodh biscuits is about 800 crores.
Okay. Yeah, that's really helpful. The other question I had is this acquired 21 brands which we have consolidated. What would be the FY23 revenue for these brands and how it has grown over FY22?
So if I heard your question right, you said on the food side that we consolidated from Patanjali.
Yeah.
Yeah, okay. So as I mentioned, we are expecting that across in the foods overall business, we should be generating a 15% growth rate. So our benefit this year would be that we had only got 3 quarters of business in the foods last year. This year we'll have the benefit of all the 4 quarters. And over a base of 6218 crores, if I were to look at 15% growth rate on an aggregate basis, we should be, of course, some businesses are going way faster than the others, but we should be closer to 7,200 crores odd in the food business this year.
Okay. My second last question on the edible oil, on 25,000 crore odd revenue, what we have garnered in FY23. You said that...
But your voice is very faint. I'm just not able to hear it. I'm sorry. If you can speak a little louder.
In the full year business of 25,253 crore, could you spell out what is the premium oil contribution?
The premium oil contribution right now is negligible. And as I mentioned, that the Nutrela oil, we did about 15,000 tons this year, and 16,000 tons we did this year. And we want to grow that to 6,000 tons a month. And now, because of the continuous drop in the prices of the edible oils, it has been a challenge. It's not been very easy. And in terms of the premiumizing side, but we are seeing that there's a traction which is building up. So we, by virtue of the Patanjali's mustard oil business, we are extracting the highest selling oil in the country on the mustard oil side. So it's a very premium product that we have, and will gain a lot of consumer traction. Second is the range of the Nutrela oils that we have. They are premium and position business that we're going to do. And the last one is the Sunrich that I mentioned. We are repositioning it. We are looking at brand ambassadors. We have recently hired a brand manager for that, and a business head dedicated and very focused on the sunflower oil, that brand. So together, all of them should account for close to about 2,000 crores in terms of the business. And we are expecting that they, instead of between 2 and 4% margin, our margin profile should be between 6 to 8%. That is a target that we have in that business. And it's a work in progress, but we are pretty confident that with the increased focus on mustard, focus through the Patanjali brand, focus on Nutrela wider distribution, as well as the Sunrich sort of work on the brand side that we're going to do, we should be able to hit in that trajectory. So the proportion of, say, the overall edible oil business itself, it will be just about 6 to 8% is what we'll do probably as a turnover, at least for this year.
So one follow-up here, sir. You mentioned that your target is to reach to 4 to 8% margin in the edible oil business. So is this initiative will take you to there to achieve that?
No, I did not mention. Our edible oil over on a blended basis, what I was saying was that only the premium end of the oil should fetch us between 4 to 8% margin. Otherwise, the business, the commoditized side of the business is between 2 and 4%. And that is the forecast that we've already done is the business, because that is the inherent nature of the business. That will remain.
One more follow-up on the edible oil business. You mentioned that palm plantation is going at full speed. So by when you think the palm plantation, the local procurement will start? Any timelines you have?
So just to fill you up on that, our oil palm plantation is the largest in the country. We are already very mature. We do a turnover of from the oil palm plantation of almost about 1,100 crores. And we consistently have a margin base of between 15 to 18% there. So the years in which the prices are higher. So for example, we could fetch almost 18% of margin. The years when it is the price points are lower, our margin will be slightly lower. But on a consistent basis, the track record shows that we make about 15 to 18% margin in the oil palm business. And it is going to be one of the mainstream businesses for us, which is 4 years down the line. We're expecting this business when we start our fullness of the time, when all the new plantations that have started happening from last year, we're expecting that this business can generate nearly 4 times of the profits that we currently have, and it will become an annuity business almost for the next 25 years.
Okay. My last question is on toothpaste category. In F23, what would be the total revenue, and if you can share, if you have it is handy, the market share closing March 23.
Did you mention toothpaste?
Yes.
I would not have access to that number. I'm sorry. That's a different business on the Ayurved side. We can try and find out and share that with you, but right now I don't have access to that.
Sure.
And it's not even part of Patanjali Foods.
Sure. No, I'm asking because in future you might consolidate in that business.
No, there's no plan.
Okay.
So this Patanjali Foods, the basic character will always remain as only the foods company, and the Ayurved side will remain non-foods, and that's how we're going to retain.
All right. Thank you, and all the best.
Thank you so much.
Thank you. A reminder, ladies and gentlemen, if you wish to ask a question, please press star and 1. Our next question comes from the line of Jigar Upadhyay with Amchijo Consultant Private Limited. Please go ahead.
Thank you for the opportunity, and congratulations to the management for the good set of numbers as far as the food business is concerned. Sir, I particularly had a question as far as the edible oil business is concerned. Since we already have now 2 listed edible oils, what is the broad volume as far as the edible oil business is concerned, and how much portion of it is branded? And my second question is, do you have a benchmark in terms of the normalized levels of margins on a per ton basis as far as gross margin and EBITDA margin is concerned?
Yeah. So our volume this year, to be specific, is 1.91 million tons that we've done. To the second question is that in terms of the share of how much of we sell to the branded route, we do about almost 80% of that. It's sold as a brand. Now the brand, gets sold as right from pouch to jars to tins to to PET bottles to different ways it sells. The inherent margin on an EBITDA basis, I was mentioning earlier, typically it has been giving 2 to 4% margin that we have. In a good year, it has exceeded that, but in general, that is a trend that we have between 2 and 4%. And it would tend to, so this benefit, how does it accrue? As I mentioned in the past also, and in this call also, that, both through the efficiencies in the purchasing that we have in the supply chain efficiencies in terms of the processing sort of infrastructure that we have, which is one of the best placed in the country. These are port-based plants, with the most efficient one, almost fully depreciated, so there is no challenge on that front. The distribution structure that we have and the margin construct that we have. So to the specific, typically the palm oil business, one of the benchmarks that typically one would work at, it should generate under normal circumstances, between 1,000 to 1,500 rupees a ton. The soya oil should typically generate between 2,000 to 3,500 rupees a ton, and the sunflower oil should typically generate between 2,500 to 4,000 rupees a ton. Now, this is a broad spectrum range. This is the inherent distribution margin that we have, and the inherent structural processing efficiencies that we bring to the table is the purchase part that we do. So we are reasonably comfortable in maintaining these numbers, but typically the range, as I mentioned earlier, that would always remain as a percentage of the revenue, about between 2 and 4%.
Thank you. Our next question comes from the line Bharat Shah with Ask Investment Managers Limited. Please go ahead.
Asthanaji, for the current year, on the edible oil business, are we kind of normalized? Because last year we saw the second quarter was really the root shock for the entire industry all over the world. Third quarter, there was a reasonable recovery. Fourth quarter, again, the price drops and all that have continued to kind of pose a challenge to the whole industry, because we've seen the numbers for the other players also, and they all have been similarly impacted. Can we say more or less the situation from now on is kind of heading towards normalization, and therefore for the current year, that margin of 2 to 4% range that we are talking of is something we can envisage?
Bharat, good morning. And so there are my very specific answer to your query. The last quarter which we currently see, the markets have dropped substantially again. There's a glut of supply side in the global markets. There is a big overhang on account of the large crop on the mustard that we had and a large soya crop that we had. And the prices have not been supportive at all. The market continues to slide. Even as I speak today, the markets have further fallen. Last night at Chicago and at the PAM. But I can give an opinion. I can talk basis our technical charts. I can talk basis the considered view if one can take as to where the markets are headed. I think they're reaching a point where they should stabilize. Having said that, the markets have a tendency to are still reaching a point of 2017-18 kind of levels. So there could be further downside of between 5 to 8% from here. But there could be an upside of 15 to 20% because there is a big event, this grain corridor stoppage between Russia and Ukraine. Russia has already given a deadline that by this time they might stop. So suddenly there is a surge in offerings which we are seeing on the sunflower side from Black Sea. They might tend to get impacted. World has a lot of edible oil, and world is looking at homes to find that. So if you were to ask me, there is less of downside from here because markets have stabilized and dropped substantially, and there is more of an upside. But there could be windows in this. The timing is the big issue that we have. So we have accordingly hedged our position. So specifically to our situation now, we continue to operate from long side by virtue of the supply chain that we have to build. Especially for sun and soya and palm shorter, which is sun and soya is 45 to 60 days, and palm is lesser. We have hedged a lot of our exposure overseas. So there is a softness in demand typically in the summer months that happens. So we would, if you ask me specifically near term for next 1 month, I expect the market to continue to be soft, probably slightly bearish. And thereafter, markets will start picking up as we get into July and start getting into consumption months. So I don't know if I've been able to answer your question to the specific. The second part is in terms of the margin profile. As I mentioned, our target remains that we should make in a good situation when the prices are stable and we are able to pass on the price increase to our brand premium to our customers. We should make closer to 4%. And in the months when the challenge is there, we should be able to do 2%. So last year, so I'll go one by one so that you get the specific answer. Oil palm, I'm pretty convinced that 15 to 18%, but that's a small part of our business. It's not large enough. But oil palm will give us a very healthy margin of 15 to 18%. On palm, soya, and sun, crush business is again fraught with its own challenges because soya and mustard seeds are sitting again at way below the MSP price right now. So that's a challenge. But between palm, soya, and sun, we are quite strong. We believe that we should be able to generate that margin. And I would retain at this point of time very much that we should be closer to the midpoint of 3% because we are pretty confident of the steps that we have taken, both in terms of management of inventory, the prices, etc. So we should come good on our margin of midpoint between 2 and 4. We should do 3% this year.
Sure, Asthanaji. No, I think it has been enormously difficult period for the edible industry, supply chain, price balance, and in a relatively low margin business to manage that is never easy for the day-to-day kind of consumption product. So really, this has been a very, very tough year, 22-23. But Great to see that initiatives are in place to ensure that we come out of it. And managing that volatility in supply chain is, I must say, quite remarkable in the way that has been dealt with. On the plantation side, over 4 years, you said we should be about. I couldn't really get the picture entirely accurately. Can you, on the palm plantation side, describe from the last year to the next 4 years, what kind of outcomes are expected?
So, Bharat, just by way of this one, what I was mentioning was that our target is that over the next 4 years, because already 1 year has passed, we currently have about 65,000 hectares, which is under plantation, of which about 50,000 hectares continues to yield, and we make about 200 crores of margin in that. So if the price points are higher, we make higher margins. If the price points are lower, that will tend to go lower. So that is one part, where we currently stand. And out of this plantation, our revenues are about 1,100 plus crores. We made a margin of, I think, about 211 crores in the oil palm plantation business. So that is one part, which is of this year. As we plant each year, so this year our plantations are going to be about, in the coming year, they're expecting that we should be close to about 25,000 hectares that we are planting, give or take 15-20%, because it's subject to farmers connecting or otherwise, and then we will keep on uptaking and build up a big momentum. So we have imported, for example, the sprouts from all over the world of nearly 4.3 million, and this is fit about, in terms of the for 25,000 hectares is 28,000 hectares is what the readiness of plantation is. So one is the global supply chain to bring in the sprouts, to put them in our nurseries, convert them into seedlings, and then distribute to the farmers. That work has not only begun last year, it has started carrying momentum. We have set up, 18 nurseries now in Northeast and the new nurseries I'm talking of, and south of India. I was in Telangana recently in Hyderabad, where we signed with the minister the agreement for Surapeta and Nalgonda district. So that is a general level. So what our expectation is that as we continue to plant, so the trees that we planted last year will start bearing fruit after 4 years at the beginning, and 7 years' time they start to mature, and then after that, for next 20 years, they continue to plant business. So it will come in waves in terms of the business, the way it will grow in terms of the margins, but it is safe to assume that we'll have one big uptake in the year number 4 from here, where all the plantations that were done last year and this year will start yielding fruits, little lesser. They will start to mature in 7 years' time. But between 7th and 8th year from today, the business should be generating nearly 4 to 4.5 times of the current EBITDA that we have, which if I were to just, without sounding directional, it should start generating 1,000 crores of net EBITDA for the company consistently 7th year onwards. And 4th year onwards, these numbers will be lesser. But specific number, I can, like how the exact revenues will start occurring. But it is very safe business that we have. And 4th year onwards, typically I'm expecting that between 15 and 20% spike you will continue to have. But between now until the 4th year also, by every year that we've been planting 5,000 to 6,000 hectares, that will keep increasing and we'll keep getting yields and benefit will accrue. So it is very safe to assume that we should get, if the prices of edible oil remain same, we should get typically between 5 to 8% increase in the income every year.
I see. And per hectare, what kind of economics is there in terms of profits?
So per hectare economics, typically, we would be safe if I were to look at, we would be making about per lakh hectare. Just 1 second, let me pull out the exact number. So our economics would be about 1,30,000 rupees per hectare is what we should be able to make. This was last year. But on a lower prices, we should say it is safe to assume that we should make about 1,10,000 rupees per hectare.
Okay. So roughly in 4 years' time, what is about 210 crore profit should be somewhere in the territory of about 4 times from where it is now. and it will then be an annuity. Apart from that, whatever new hectares that we keep it would continue to create an additional annuity based on those timelines, right?
Not in 4th year, Bharat. This might happen closer to 7 years. But what I will just tell again that every year we should continue to improve by about 10% margin our business for all the plantations that were done 4 years back, 3 years back. So it keeps coming into maturity and keeps doing it. In the year 4, if I were to give a very specific number, we should certainly be almost nearly 70% of where we are today. So that should be starting to yield about 300 to 340 crores. We will just doing quick maths while you were talking. And thereafter, every year it will keep exponentially increasing. By year 7, we should be closer to about 800 crores to 1,000 crores from the oil palm plantation business.
Got it. So in 4-year time, roughly about 500 crore of profit. About 7 to 8 year time, about 800 crore profit roughly. And whatever we keep adding to the kitty will accordingly follow a timeline and will keep generating the additional profit.
Yeah, the business will stabilize at 800 to 1,000 crores, and thereafter we expect to maintain the same trajectory for next 20 years.
Sure. Thank you, Astanaji.
Thank you, sir.
Thank you. Ladies and gentlemen, we have reached to the end of the question and answer session. I would now like to hand the conference over to the management for closing comments.
Thank you for everyone who attended the call and asked very insightful questions. The only thing that we wish to sort of say in the summary that last year on the oil side we have faced challenges, but there have been a lot of positives which have happened for the company. So the positive number one is that we acquired an extremely profitable business from Patanjali on the food side. We've had 3 quarters of good run that we had, and we continue to wish to grow that momentum. The second positive news that we have is last year that in terms of the oil palm plantation, it started to gathering momentum. We continue to plant aggressively. We have set up the base in last 15 months for a big expansion on the oil palm side. We are very positive of the outcomes that we're going to achieve in fullness of time. And the company will be repositioned in the oil palm business entirely, both from the turnover side as well as the profit side. The third positive step that the company has taken, and which are very decisive and clear steps, of repositioning several product categories which are amenable to premiumization, starting with nutraceuticals, looking at Nutrela, looking at biscuits and confectionery as we continue to evolve and grow. So we are very positive that very immediately we'll start seeing an uptick in the premium end of the product categories that we have, where we'll be able to match the kind of the attraction consumers have at the premium end for our products like Nutrela, Patanjali, mustard oil, a lot of other oils that we have. A lot of good efforts that are happening, and we should be able to reach in that direction. And last but not the least, in terms of the leadership team, as I mentioned right in the beginning, we are working towards hiring of top talent, retention of top talent, and ensuring that they get rewarded handsomely. Just yesterday, the board has approved ESOPs, for the management team at Patanjali Foods. There are lots of people who will be beneficiaries of that, and the finalization of scheme, we are expecting that we will close it between 30 to 45 days, and the agencies are working on it, so the finalization of the schemes will be done. That will get finalized. We're working in terms of the leadership talent of training. We ran a series on the social media, and the company is in good hands. The company is in good management hands, and we continue to strive and remove all the kinks that we have on some of the businesses, and hopefully that will all be behind us. So the company should be on good path as we go forward. Thank you very much.
Thank you. On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.